Hi there. Hi there. Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm guessing my audio would be okay today. Excuse me for the audio glitches yesterday. Today should be a normal day. As far as my audio goes, yes. As far as the markets go, maybe not. Well, let's take stock of the situation, right? So first, the cases are spiraling, so you have to keep that at the back of your mind. It's just going through the roof currently, and now the governments across the board are a bit worried. And by the way, it's not just in India. Yes, India has a problem point, but Philippines, the worst performing Asian market, also has a large number of cases. Canada has yesterday sounded the bugle of trouble. So there is issues all across. Did the markets react too negatively to that? No, not really. I think the US markets came off a bit yesterday, but they didn't even come off. They were like quiet in trade yesterday. So no major cues to take home from the US markets yesterday. You have to keep in mind. There was an interesting chart though on the Bloomberg terminal and on in the Bloomberg stories, which showed how the short volatility bets have ebbed now. So people in the US who were betting that the volatility will keep staying lower, I think those bets have now shrunk. Net short volatility bets have shrunk, which means what? Which means that people now believe that volatility could come back to the US markets. And if indeed that is indeed the case, typically volatility coming back does result in gyrations. And if the markets are at highs, that would mean that maybe there could be some bit of corrections as well. I'm not an expert real to try and figure out whether volatility will come back, and therefore if it comes back, this will happen or not. But I'm just showing you the chart, which shows that the net volatility short bets have indeed shrunk each of the last 6 weeks. So you have to bear that in mind. However, to markets and what is Asia and SGX indicating, I think Asia should be mixed bag, marginally lower, marginally higher, depending on which index you're looking at, but flattish because hardly any cues there. Keep in mind, Dow futures are marginally in the green as well. So based on that, the Asian markets which are trading would be neither here nor there, so to say. That was a Bill Bryson book, but yeah, that's what the markets would be. And the SGX Nifty, I reckon I'll be really surprised if we have a good day. I mean, we're starting off flattish, and we held out on nerve yesterday, but my trade setup today is not really too much about what I think will happen to the markets or what could happen to specific pockets. Enough has been said, and I've said it a number of times on Twitter and on this trade setup that global cyclicals are the ones to look at. But I think the Jefferies note which came yesterday, wherein they made changes to the model portfolio, had two important points which I'm bringing out, which is actually the trade setup, not just for today, maybe for the next few days. They say, and I quote, this is a note that came in yesterday. They're saying that a sharp spike in COVID cases in the state of Maharashtra has forced the state government to impose stricter than expected restrictions. Cases are spiking in the rest of the country as well, and more restrictions could follow elsewhere. A potential spread of local lockdowns would likely delay the expected recovery. Effectively, this is not a nationwide lockdown imposed by the central government and states following suit, but individual states looking to contain the problem in their states, maybe for a month, maybe for 15 days, maybe for a month and a half. But we're seeing local states doing this. Maharashtra and Delhi have done this. I think there are some restrictive measures placed in Gujarat. You never know if these can get extended to rest of the states, and I think that is the worry. Now the net repercussions of this, and that's the other quote that they put out, that our long-term view of a housing-driven economic recovery remains, but tactically we lower banks to underweight and make IT services overweight and staples neutral. Imagine, viewers, what's happened is that for all the conversations that were going around that you need to be net long local cyclicals, look at banks, look at autos, I think those conversations for now tactically have gone to sleep. Jefferies was overweight banks and they have turned underweight. It's a double downgrade, so to say, that they put out yesterday. And you have to bear in mind that right now, the desire to own a local cyclical is very low because we are no longer at say 7,500, 8,000, 8,500, 9,000, which we were back then, wherein you would believe that the valuations are so attractive, then you can be long local cyclicals and wait for a period of time. We are at 14,600, 700. We may not be at 15,500, but we are at 14,600, 700. We have underperformed the global markets majorly, by the way. Keep that in mind. But there is no reason to believe that this can't happen. By the way, here's some statistics. For all of you who believe that if world markets are doing well, India should do well. Here's one statistic before we get to specific stocks. There are three large instances, or three very recent instances, which will show you that in May 2020, in October 2020, and March 2021, this is what Dow did. This is what the Sensex did. 4% higher. Sensex was down 4%, a net 8% differential in performance. So everybody who believes that, oh, we have underperformed and therefore we have to catch up, it has happened 3 times now in the past, in the last less than last 12 months. So there's no reason to say that if US markets are doing well, we will necessarily do well, because we have some issues with the US markets don't. I'm not making a case for a correction, viewers. I'm just saying all of us need to be careful, because cases are spiking here. They're not spiking in the US. California is actually talking of opening up the economy very, very shortly. Vaccination is much better there versus in India. So you have to bear that in mind. Anyways, let's talk about specific pockets. By the way, keep in mind, FIs were net sellers yesterday as well, 1,092. Not a very large number, by the way. So that's a relief. But 1,092 crores sold. 2 days on a trot now, FIs have sold about 1,000 crores. What are the stocks, therefore, I'll be watching in this session? Well, like we've said, the global cyclicals are in focus. Metals continue to remain in focus. So Tata Steel Long Products and Tata Steel BSL, two names I just want to bring out. So Tata's business update, Q4 business update for Tata Steel on the long product side. Crude steel, the production was up 19% to 186,000 tons in Q4 versus 156,000 tons YOY. Total sales volumes, 172,000 tons versus 137. The total FY21 volumes were up 11%. The red doesn't mean that it's a negative sign, by the way, keep in mind, but 11% uptick at 648,000 tons. So pretty good going for Tata Steel on the long product side. Tata Steel BSL, the subsidiary, also clocked in pretty decent numbers. They've achieved the highest ever quarterly steel production of 1.18 million tons in Q4. Sales volumes up 22% at 1.19 million tons. So steel continues to remain in focus. I think Max Financial Services would also remain in focus. Axis Bank, formally, I think, I'm using the term formally with reason. It formally becomes the co-promoter of Max Life Insurance. The bank and subsidiaries have completed the acquisition of the 12.99% equity stake in the company, and the Axis entities, which is the bank and the subsidiaries, Axis Capital and one more, have the right to acquire an additional 7% stake in the company subject to regulatory approvals. Now, has Max already rallied on this hope? Yes, it has. But is there a valuation differential between Max and some of the others? Yes. Now, the valuation differential was because people believe that what if Axis Bank, which is a major distributor, will cease to be one, and therefore what are the problems that could come in for Max? I think that has now gone away, right? If they are now formally co-promoters of Max Life, they will in fact distribute it with even more gusto, and therefore I think the valuation there's a case for a valuation differential, whatever that exists between, say, an HDFC Life or some of the others versus Max, to narrow, if not completely evaporate, and that should be a net positive for Max. So do watch out for this one. Chola could be an interesting one too. They've partnered with Zoho, Razorpay, Zerodha, Ujjivan, and AirPay to submit a new umbrella entity application. Essentially, they want to make a platform. Now, all the others in this game as well would remain in focus. This is just a start to create a platform. But, platform businesses are new to the country. At some point of time, they'll become larger than life, and that might give a big valuation. So if this succeeds, it's a big thing for all the entities involved. Whether Chola reacts today, I don't know. But it's a stock that you should keep in focus. If it reacts, this is the reason. Couple of other stocks. I don't quite know if there will be too many reactions on these, but I'm still laying them out. Reliance or Inox, either one. Well, let's start with one of them. So, okay, Inox Leisure, they are going to raise funds up to rupees 300 crores to issuance of securities. Not necessarily a QIP, it could be anything. But while they're raising these monies, and maybe the fundraise would be extremely successful, we have to keep in mind that just as the economy was opening up, we are now starting to see these lockdowns, and therefore these businesses, the ones which are exposed to the lockdown fears, will not be at the forefront of investor interest. So sure, Inox could do the fundraising, and sure, it could be successful, and sure, it could rise for a day. Whether it will rise all through the month of April, I don't know. Lastly, an interesting deal between Reliance and Bharti, not a very large deal, but it's an interesting one, and which is why we're putting it out. Jio has acquired the right to use the spectrum in 3 circles, 800 megahertz from Airtel for 1,500 crores. A bitter not enemies really, but bitter competitors, but sharing this because this was unused from Airtel's side, so it makes sense for them as well. It made sense for Jio as well. It strengthens Jio's offering, which is actually a net positive for Jio, but gives some money to Airtel as well. So therefore, it may be that way. It's subject to regulatory approvals. I don't think it's majorly stock moving for Jio as much, even though it's more positive for Jio, but maybe Airtel could react a bit here and there. So do watch out for this too. So these are a few names that you should watch out for. Lastly, viewers, I'll leave you the quote from Jesse Livermore, and all of us who believe that we know better than the markets. He says, and I quote, "A prudent speculator never argues with the tape. The tape means the ticker. Markets are never wrong. Opinions often are." I hope all of us remember this as we look at the next few days for the markets. Let's hope that we contain this second wave or whatever we call it, and the markets glide through this as opposed to reacting too much to this. For now, we are holding up very well. I just hope that it stays that way. Thanks so much for tuning in. Have a safe day ahead. Please wear your masks if you're stepping out.